Hi and welcome to the market alert for Thursday, the 3rd of December 2020. So the main financial news for yesterday is bonds bloodbath as yields increase to the upside. As the jobs numbers flop, gold pops, dollar drops. So again, the precious metals come into the fore during yesterday. And of course, the main news, without boring you, did mention it in my email yesterday morning about beware in case we get this announcement. And it came out just as the futures market opened in Germany, 7 a.m. for the DAX, and the virus has been approved after just what seemed more like a few weeks, never mind a few months. But I'm not going into that in this video. You make your own mind up on this one. But anyway, let's see what the market's reaction was to it. And here it is. We had this pop to the upside. And then just look at the selling that came in. So the market's already factored in the vaccine approvals. So the AstraZeneca and also the Oxford one, no doubt will have the same sort of reaction, just a small pop to the upside. However, saying that, the Moderna one, which is the cheapest one to produce, may have more of a reaction because the Pfizer one is incredibly expensive, apparently. So yeah, we've got prices moving up to the DP, and then when they opened, they moved to the downside. And I wasn't at the desk at the open, unfortunately. I had to take my wife to work, so as I needed the car. So the market opened, dropped, and then when I got back, we got this sort of shakeout. There you go, you see I returned, having a look, checking things, and I could see the buying coming into the market down here. We're starting to get the green bars in the volume, indicating that the shorts have taken profits. Now, interestingly enough, I was asked about this, and why would the market go down when the Pfizer news was good, or the vaccination news? And the reason for that is quite simple. If you've already factored it in, and a lot of people will go long. So what you do is you shake them out first, bring it down, take out the stops, and then reverse the market and bring it back, as you see there. So prices then hit the 20 bar moving average twice. The 5 bar is below, and it's a matter of whether prices will hold down at the low that we have here. So prices are doing a retracement, which is normal, come up and then come back. It's whether they close below the low will determine whether they're going to continue lower. If they don't, then prices are likely to move back to the upside. On this occasion, they come down to the BRN, they go through, and then we go to the S1. Now, what's interesting here is this price bar here, because the range is narrow, and the bar before has, the volume is greater than the previous bar, and the range is narrow, and we're sitting at the S1 as well. I was hoping it was going to come down to the low, because we know the impact we've seen over the last few weeks at the low. The market just comes back off it and moves to the upside, so it offers a great risk-reward trade. On this occasion, it was the S1, and then prices start to come back, and again you see an increase in volume as we come back through. Prices need to hold at this level. We've closed above the 5 bar moving average, and I'm just going to fast forward as prices then, let me just come back a bit so we can see where we are. So then we get a buy signal, and the market goes up to the scalp. I'm going to fast forward through this. We've got some selling coming into the market here, and the reason being is because to the left we have some selling where the last selling took place, where we went down to the S1. So no surprise there. We then have some more potential weakness, but notice how prices are bouncing off the 5 bar moving average, and it's also above the 20 bar moving average, having come back off these lows. So let's just fast forward through this. I'll move the stop to break even now, but we've got to get through the 200 MA for sure. And all the way through here, again, you can see that even though prices close below the 5 bar moving average, once they return back above, prices start to move to the upside. It's something I've noticed over the last few weeks, how this market is doing this, and you can see this here. You come back below the 5 bar moving average, and then they manage to return it back to the upside, back through the 200 with professional buying, an increase in volume, which is what you want to see, and then head up towards the DP, And over here you've got the resistance to the left. This is where the market sold off to begin with, and then as we come back now, time to leave the party. Once there we go, we're coming back because the market has some selling here, which you can see, and once it's starting to close back below the 5 and the 200 MA, then prices are likely to drift. We can see there again, they see how they brought the market back here as well, just to try and hold it. And this is why you get this sideways movement and then back through and then back. So it just did this and then drifted lower. Just come back a bit. It just drifted lower into the 10 o'clock cutoff period there. And then in the afternoon, well, we had the ADP numbers at lunchtime. They weren't good at all, but the market just did that simple correction, then started to move back to the upside. Let's fast forward. Again, you can see how prices came off the low in the Dow. Even though the news was bad, market trades sideways and then starts to move to the upside. And we had, of course, Powell speaking at 3 p.m. And the market didn't really do anything. It was just waiting to see if Powell was going to say anything. And then even this, you can see there, the market already sideways, waiting for the wisdom of Powell to see if it was going to cut rates or do something to boost the market, but none of that. And there you can just see prices stuck in a range. A really quiet afternoon there for the DAX. However, things are picking up in the implied volatility. So let's have a look at those as well. So we've, even though yesterday the market moved higher, we can see that we went from 20.28 to 20.71, and also prices just starting to move above the 20 bar moving average. Bit of an amber there. Of course, it doesn't mean that the underlying market is going to correct, but what it does tell us is the option sellers are getting concerned and they're increasing the amount of insurance in the options that they're actually selling. And of course, as anybody that's ever sold options knows, that you're exposed to unlimited losses unless you actually cover that position. So it's a case of, they're starting to feel it and sense it. And if you look at the daily chart of the DAX, you can see we're starting to round over. The previous day's highs are not being hit at the moment. The market trades towards it but then fails, and we're below the 5 bar moving average now as well for the last 2 bars. Certainly for yesterday we closed below, and overnight we're trading below it as well. So the market opened more or less where it closed, and you can see we had a quick run up to the 200 bar and then up to the DP. And again, you've got that classic selling at the top of the market. The market reverses and has come back below the 200, only to come back above it to the previous day's close. And at the moment, it's at a crucial point where it will need to come back above in order to move higher. So the downside is looking fairly weakish, and this is how it looks when compressed, where we have the ranges. So if we get a move to the downside, the low is going to be crucial. You can see that we came off the low earlier this morning and bounced off it. Can we bounce off it again? If not, then we go down to the S1, the S2. And if this starts to happen where the low is taken out, you've got these other areas as profit targets, but you can also come back to the daily charts, and you can mark up some fibs on this as well. This low here is what I would use to begin with, and this high, and drawing these in will give you a set of fibs to trade off there, as well as when I mean trade off, I mean as areas of support coming into the market. So let me just drag this over to the left so you can see those areas. And of course, the important one here, the 20 bar moving average, which is also in the area of the 62 and 78% retracement. So watch out for this as well. Meanwhile, in the Dow, This actually breaching the previous day's high, but not yesterday. But overnight prices have. So they're doing their best to hold it. But you can see this defined sideways range that we've got going on at the moment. Obviously still waiting to see if Trump's got a chance or not. And I mean, that's probably the main news that the Dow is waiting for. We're going to reach a point, though, where the traders, if they haven't got any decent news, are going to correct the market to the downside sharply so that it encourages the Fed then to turn on the printing presses again and provide liquidity. That's what they've been doing for the last 12 years. And that's what they do with corrections. And then once they've got the liquidity, it goes into the primary banks and then it works its way back into the stock market. And then finally, let's just have a quick look at whatever today's news is. It's not Wednesday, it's Thursday, or as I like to refer to it, as Friday Eve. And we can see there we've got OPEC meetings. Yeah, crude oil's going great guns at the moment. The manipulation is breathtaking. I see that a couple of weeks ago, Johnson on about the stopping and making of petrol and diesel cars. Well, that's going to go down well in the Middle East. I can't wait to see how that one pans out over the next 10 years. Well, it's not even 10 years, is it? It's only 9 years. Anyway, unemployment claims 130. Again, another 750,000. And 3 p.m. we got the PMI for today. There's no other central bankers speaking today. They've all seemed to have done their job this week, unless of course we've got one out tomorrow. Let's have a quick look. No, we've just got non-farm payroll tomorrow, so the market could be waiting for that as well. Okay, that will do it for this one. As ever, thanks for watching. See you in the